This episode brought to you by Origins, technology for today's lenders. On the show today, we have RiskScout's very own Ryan McInerny talking about cryptocurrency and compliance. Yes, we've all been hearing about that. So he gives us the latest update on that, what's going on in that world. And then also he talks to us about how credit unions can best support their cryptocurrency credit union members who are actively participating in this space. So really, really good stuff here from Ryan. So I hope you check it out. Welcome back to our show. And on today's program, we're talking a little crypto compliance this time around. And on the show today, we have RiskScout's very own Ryan McInerny. He is the senior compliance manager there at RiskScout. And Ryan, how are you today?
I'm doing well. How about yourself?
I'm doing great. Better now that you're on the show because we get to talk a little crypto, and then we're going to add a little compliance on there as well, because there's been a lot of talk about compliance and cryptocurrency, especially in the financial services industry, credit unions in this case. So, and kind of the tagging off on that is like how credit unions can best support their cryptocurrency members, the ones that are actively participating in it. And I see that number going up, and we're going to talk about that a little bit in the interview here. But I wanted to start off, Ryan, with what's the latest that you're hearing in the cryptocurrency compliance? Again, we've been hearing a lot about this, but not a lot of action so far. But I think that's going to be coming to a halt here. I think there's going to be a lot of action here pretty soon. So what are you seeing out there as far as compliance goes?
Yeah, well, as far as compliance goes, there's typically three categories that a member is going to fall into. FinCEN defined these a while back in terms of compliance. And so it's either going to be the person is a user, or it might be a business or a person that's an exchanger. So someone that's exchanging cryptocurrency for some other store of value. It doesn't necessarily have to be for currency. It could be pretty much for anything else that has value, or an administrator. And the administrator would be somebody that's actually administering the coin, taking coins into and out of service. Mm-hmm. And so when we're talking about the compliance for that, when you're looking at exchangers and administrators, typically they're considered a money service business. So really just looping them under your existing money service business policies, procedures. If you have those, if you don't have them, that's something you want to develop to be able to support these individuals or businesses. And then when you're looking on the user side, people that are actually just using cryptocurrency as something maybe to purchase goods or to transfer to maybe family members in different countries, typically verifying what's going on with the exchange that they're using is going to be the most important part. So the FBI would sanction an exchange that's not following maybe the proper BSA measures or something like that. So if they're transacting through an exchange that hasn't been sanctioned, then you can really start to feel more comfortable with the transactions that they're actually performing. Yeah,
no doubt. As you're talking, I'm actually foreseeing a chief cryptocurrency officer at probably some financial institution somewhere as it grows in popularity. So having said that, though, I mean, how can credit unions best support their members who are actively participating in cryptocurrency today? And like you said at the outset, I see this number going up exponentially here in the next few years. So how do you see them supporting those members?
Yeah, so I think there's two ways of support, because there's supporting for the individual user, the person that's trying to actually just buy goods or services with this, or maybe put it into like their investment account. And then they're supporting businesses that are in the crypto space. And so I'll start on the user side. If you're trying to support users, there's a couple of different options you might have. So if you wanted to create some way to custody the asset for them, I think when we look at traditional financial institutions, particularly credit unions, it's built on trust, it's built on relationships, and your members trust the individuals at the institution to help them. And so if you can provide a service where you take that trust forward and maybe custody that asset, have a wallet or have a third party that you use for wallet services, there have been surveys done. I don't remember the stats off the top of my head, but the majority of the individuals that responded would have preferred to hold their belongings, their crypto at a financial institution, because they have more of that comfort with their local FI.
Yeah, and that adds value to the financial institution in that case as well, right? Because I mean, credit unions in this case. So I mean, just you're getting this from a trusted resource, basically, and then that totally adds value to the credit union for sure. So I
actually want to add a little bit on the business side.
Oh, please.
So when we talk about businesses and supporting businesses, there's just such a wide variety of businesses in the crypto space. So for example, if you have miners, you have harvesters, you might have hardware manufacturers, you could have the coin administrators. All of those individuals and businesses are going to have different needs. So being able to assess what the level of risk is at that company that you're trying to support, and being able to actually give them the services that they're asking for. If you can't stratify what the risk level is and figure out what your procedures are for the different customer types or member types, then you're not going to be able to support them that well.
Right. Oh my gosh. It's such a new world we're entering right now. So, but it's very exciting indeed. So what is the level of activity in this area, and how much do you see it increasing in the future?
Yeah, I think the level of activity is, I mean, it's shocking. When you've seen the growth in crypto over the past 5-10 years, you had, I mean, probably me, you, like a lot of the people that we'll talk to, if you look 10 years ago, it's like, oh, this is some like crazy thing that's going on the internet. Like it'll last like a couple of years. Maybe it'll support like some video games. And then you have a market cap that goes up to like $3 trillion. And that's pulled back obviously in the past few weeks, but there's a huge level of adoption, a huge level of support. And when we look at the .com bubble in the past, you know, you had that adoption, you had a pullback, and it's not like we saw the internet go away.
Yep.
So I think we'll see some of these companies that, you know, are a little bit frothy, that can't really be supported, start to cut out. You'll see some changes in market capitalization, but as we look forward, the ones that are being successful and have things that are innovative and changing the way we actually have our traditional financial markets, those are going to continue to grow.
Mm-hmm. Indeed. I was just thinking about the .com bubble. I mean, you took the words right out of my mouth, because obviously that was crazy times. Like these aren't crazy times as well, especially on the crypto side, but it really filtered out those companies that were for real and the ones that weren't. So, and I think this is going to happen this time around as well. So do you think the compliance measures will curtail member activity in crypto, or maybe even promote it or foster it? I mean, what's your opinion on that?
I think it'll foster really the activity levels. So when we look at the regulation in general, there has been some proposition that crypto be regulated by the CFTC. I think that's under the Financial Innovation Act. It was proposed by politicians out of Wyoming and New York. And so the idea is if it was to be regulated by the CFTC, crypto would be more of a commodity rather than how it's being traditionally treated right now. And you have one regulator that's overseeing the entire thing. Mm-hmm. And some of the biggest issues that you have with crypto are fraud, because, you know, you have these smart contracts that typically you and I, if we're not coders, so I can't read through that smart contract and figure out like, hey, I don't believe in this, I don't believe in that. So right now, when that hasn't really been put into a really, you know, user-facing, easy to understand platform, then it's easier to take advantage of people.
Completely.
So as we get more consistent regulation, start to build compliance measures around that consistent regulation, kind of reduce that fraud, reduce the chances of us losing money entering the market.
Yeah, this is just a new area where fraudsters are just kind of licking their chops to really jump on. That's where the compliance stuff helps out as well.
Yeah.
So, and I can't remember who I talked to, but somebody early on said that the compliance or the regulations will actually be a good thing because it'll really validate the industry, right? So I saw that as a positive as well. So I want to talk about the recent downturn in crypto. You kind of alluded to it earlier. So do you think this will expedite compliance measures to help protect consumers and members out there, as well as credit unions?
You know, I think I could see it starting to expedite some of the compliance measures, some of the regulation. You know, one thing I talked about, regardless of the industry, is when you look at how regulation is actually created, it's based on different financial institutions that kind of foray into these new markets, and they develop their policies, figure out what the risks are. Mm-hmm. And then regulators will go and they'll look at the policies that have been developed by all the institutions that are under their purview and say, this was the best practice here, this was the best practice here, this risk isn't being addressed. And they try and summarize all of that to inform the broader regulation. So as we see this downturn, you know, we're going to learn more about what needs to change, what we need to look at, and that's going to inform regulation. Then it'll inform compliance. It'll make it safer for everyone that's trying to participate.
Yeah, I totally agree there. So it's just kind of the roller coaster that we're on right now that you really have to kind of tolerate. So so good stuff. Anything else here to add to wrap up, Ryan? I know we could talk about this for the next half hour easily, but I know you have a job to do, so I don't want to monopolize your time. But anything else here to add to wrap up for credit unions out there as far as compliance goes? Yeah,
you know, I'd say just being aware of what's happening in these markets, developing policies for this and some of the other emerging markets is important for when it does kind of come to your doorstep. If we look back to online banking, if you had a policy and started to figure out how online banking worked prior to actually putting it into place, you were more prepared for when it became mass adopted and people really wanted that sort of thing. So just understanding what's going on, knowing what the definitions are, knowing how to actually enter the space safely, what customers you are willing to take on, what customers you aren't willing to take on, members. Bad habit as a OCC regulator. We only looked at banks. So But I think it's really important to look at all of that and be ready if the opportunity does arise where you need to enter the space.
Oh, completely. And I see this expanding out into like other digital assets like NFTs and things like that. So yeah. So again, a whole new world that we're all about to embrace big time. Sorry. All right, Ryan. Well, I'm going to let you get back to work. Thank you so much for this information today. This is tons of takeaways here. So really, really good stuff here, and look forward to having you back on to see where we are as this continually evolves right before our eyes. So really, really good stuff here, Ryan. Appreciate it.
Yeah. Thanks for having me. Pleasure talking with you.
Oh, you're This episode brought to you by Origins, technology for today's lenders.